Ho, ho, ho! Merry Christmas, everybody. Santa Rod here with the one, the only, the CEO of Zega Financial, Jay Pestrichelli. Hi, Jay. How are you today?
Hello, Santa. Doing well. How you doing?
I'm doing wonderful. And before I get the other Rod on here, what would you like for Christmas?
Oh, well, look, besides, profits for every fund that we manage, I think the Giants could get a real good first draft pick. That'd be great.
Sure, anything for you. You gave me Misty, I'll give you draft picks. Ho, ho, ho. All right, I'll get Rod. I'll get the fatter Rod in here. 1 second. All right, everyone. Sorry about that. Had to make it a little comical. Hopefully everyone can hear me. All right, they can. All right, I'm back here with Jay, as Santa mentioned. So we're just gonna get right to it. Jay, how have things been? I know your funds are growing, and Misty's taking over the world. So how's life been?
Yeah, I mean, that one is a lightning rod, no pun intended. Like, everybody wants to talk about what's going on in MicroStrategy funds, not only ours, but a bunch that has definitely been interested. But we've been busy, new funds coming out here and there. I would expect quite a bit more to hit in the new year as well. But actively trading, doing our best to keep up with the volatile markets. Got a little volatility at the end of the year here, right? A little unexpected, but hopefully all of those folks that want to get kind of their last, selling in before the end of the year for cost basis reasons is over, and we could get a little Santa Claus rally coming into this last week after the 25th.
Speaking of Santa, do you have any early Christmas presents you can give us? Anything coming out that we're going to be super excited about? Anything you could talk about?
Yeah, I think we finally got to file for a few more inverses. I think for the first time, you're going to see some portfolios. I can't say too much about them because they're kind of in that quiet period of filing before going effective. But the YieldMax portfolios, you've seen Soxy and Biggie that are out now that are the targets. So I think there's a handful of kind of additional choices that are coming down the pipe for everybody. Like, you look at the Biggie and Soxys, the Target 12s, we think that could be an interesting set of products for maybe a distinct universe of yield-based investors. But we know that there's so many folks that like the ULTY style funds that, having more of those could make sense, but with maybe a little more sector focus, or maybe a little what is the term? I'm forgetting the term, but where we're kind of themed, right? Thematic investing, where you're all, AI or all crypto or stuff like that. I think we'll start to see some of those shortly in the first month. So plenty more stuff coming down the pipe.
So
down the chimney. It's down the chimney. It's Christmas.
Speaking of ULTY and the flexibility of ULTY, I know you kind of just mentioned it. You may offer that flexibility on other funds. Is there any thought ever of offering that same flexibility on the individual covered call ETF funds, or is that just going to become too much?
Yeah, it's more like, hey, are you using, puts, are you using collars, are you using butterflies and those types of things on the single stocks? For now, no, nothing in the pipe on those. I think it's interesting, though. The good thing is, folks that want that understand that level of complexity, that want it, you have, actually fairly healthy option markets on a handful of the YieldMaxes these days, where there's real volume out there. Trading you got to be a little patient on those, just because they're wide bid-ask spreads. But so to answer your question specifically on the single stocks, nothing coming down the pipe where we are, building hedges or risk limitations. You are still taking stock risk, underlying stock risk, when you buy one of the single YieldMax tickers. And when I talk about the flexibility of ULTY for other funds, I think I mean more of the multi-position piece, right? The tactics are going to be ones that, we want to be able to use everything that we can. More to come on that as funds start to go live. But the general idea there is, when we have multiple positions that are designed to go for the highest distribution rates, we want to have more flexibility, more tools at our disposal, like ULTY.
Okay. And last question before I get to the community ones. What's going on with the Bitcoin? Are we have we hit the bottom? Are we going back to 100K? What do you think?
Oh boy, yeah. So look, I don't know anything, right? Who knows where Bitcoin is going to go? But if you look at the history of Bitcoin, I think it's had 80% retracements multiple times. But every time it's hit those new highs, it's been at a fairly decent clip. So if you follow history, it doesn't feel like this is the full dip, right? In the near term, it feels like it's probably short-lived. But look, you should expect another major pullback more than one more time when it comes to Bitcoin. That's the challenge with Bitcoin, right? It's a traded vehicle. There's no true fundamentals underlying it. You can't go to like cash, value or book value or PE ratios. It's a trading vehicle. And while crypto is certainly becoming more and more popular and getting more and more credibility as it's in the trillions of dollars at this point, I think you should expect plenty of volatility in that. It is not going away. I think you've got some companies now like MicroStrategies and Mara that are starting to implement, programs where they are regular buyers and acquirer of Bitcoin, and ultimately it'll be a supply and demand story. There is a limited supply. That's the argument for this one on Bitcoin. So, at some point it'll find its level of stability. I don't think that's over yet, but I also don't think that the current run that it has been on is over either. It seems a little too early for it to have the pullback, because we were at like 68,000 a few years ago, and then now to go up to 108 didn't seem like enough of a higher high compared to its previous, new level of trading. So I think we got a little more to go. But I'm also a buyer at 50,000 if that happens. Yeah. Not that that's a recommendation at all.
Okay. All right. I'm going to start at 5 p.m. for the people who followed instructions. So wondering about a Robinhood ETF. So yeah, I know you filed for what is it, Robbie? You did file for one. Is there any sign of when that's going to release the Robinhood covered call ETF?
Yeah, I can't comment on that one yet. We haven't put that out there publicly, but you're right. It was important enough to file for it.
Was it Rohi? I forget.
Yeah. Nothing, no news on that one for you.
Yeah. Roki. No, I can't find it. Anyway, let's move on. Okay. Here we go. I got yelled at last time because I took too long with the questions.
Oh, okay.
Yeah, see. I actually did a delay, so everyone has a 3-minute delay. Do you expect the price of Misty to go up significantly when it starts to be added to the indexes? Well, it got added today to the NASDAQ. You have a comment on that, or when did
it do?
Adding it?
It was down, right? So look, getting added to an index, it's almost a little bit of a curse, and there's plenty of examples where getting added was not great and getting removed was very good. However, Palantir is a very different story, right? That was added and then continued to run. Yeah. Generally, there's no value added to a stock because it got added to an index. It's a supply and demand thing, right? Like funds have to go out and buy, add to their portfolios from existing shares. And, if people are holding on to them and, lower demand, higher demand, lower volume, price goes up, those kinds of things. And so ultimately, it doesn't add any value to the company. You got to hope, though, that if there is a pop early, which tends to be the case, the earnings or the fundamentals or anything else grows in to that price advancement. So, we're normally not, it's like a split. It doesn't add any value when you do it, but hey, maybe it makes it more interesting and, people want to trade it more.
Hypes it up, right?
Yeah.
So the announcement, whenever that was, right? Although people kind of knew in advance, but at that point in time, it probably kind of raised it in general. But all right, here's a question about scattered strikes on, I guess, on Misty to be more like Coney. I don't know. So Coney fund manager, what I've noticed, he scatters his strikes all the time, right? And I love that. I think it's a great move, right? Sometimes it works out, sometimes it doesn't. Versus some funds you see, they pick one or two, right? So is there any methodology to that, or is it just kind of how it lines up based on?
Yeah, it's so a little bit here. So look, in a perfect world, you have the best strike at the time that is time to trade, and everything goes into that, right? I mean, options work best when you get the strike right. Spreading them out usually doesn't work out as well as actually picking the average one that it would be. That's just because options aren't linear. However, a lot of the times while you'll see us moving strikes around or having multiple spreads or different strikes, it has to do with inflows and outflows, right? So if all of a sudden you have a day of large inflows, well, you got to put the trade on that's best for that day, right?
Yeah.
That's new money that came in. Or when money leaves, you got to take off the spread that has, the most advantage. Usually it's the one that's made the most money. You want to cash that in, right? So you have to kind of enter and exit your positions as money is flowing in and out. That happens, every day there's money movement in most funds. So, I mean, that has a lot to do with it. We don't deliberately spread them out just for the sake of spreading them out. Ideally, when everything came to an expiration, we could put them all in at once. But as you see with the addition of, like, let's say the call spreads now, the time to roll them is different depending on the characteristics of the call spread. So it almost kind of propagates itself that once you're in a spread, that's going to be a chunk of money that then kind of moves around on its own. And then when new money comes in, it may fit that criteria or it may not go into that same spread. So it's really a function of the more activity because of the spread trading and also because of the money movement in and out that drives that. Given the choice, though, there's no reason to spread them out. It's always better to find the right option. I could tell you maybe in some names like that have maybe a lower distribution rate, like the Mag 7s, like, Google or Apple or Meta, those sometimes you can't get it exactly right because maybe there's not enough strikes. If you go too close, you're just too close. If you go far away, you don't get your income target. So maybe I'll say 10% of the time, the spreads are done that way because you can't actually get the real price you want and you got to average it out. But generally, it has to do with inflows and then the active trading on the spreads.
For the inflows and outflows, like for that day, like if you have an inflow or outflow, do you have to make the trade, like remove from the synthetic or add to the synthetic? Do you have to do that, or do you try to do that the same exact day? Or do you do it the following day? Like say if you have 200,000 additional outstanding shares were added to the account, are you able to do that the same day or you do it the following day?
When we see the inflows, we do it that day, right?
Okay.
So those are assets of the fund by the end of the day. So you want to have positions on at the end of the day that reflect the assets of the fund.
So you put that to work right away.
You put it to work right away. Now, look, maybe there are times where we go, you know what, the leverage or the movement of the underlyings doesn't dictate adding, but most days, as you can see from the trade log, we're doing trades that were associated with inflows and outflows.
Okay. There's a lot of inflows on Misty, that's for sure. Here's an ULTY question about, I guess it's a long one. I'm sure you could read it. I'm not going to read it out loud, but I guess the last part of it, do you have plans to manage downside on ULTY?
The trick on ULTY is the guidance is income first, growth second. There's nothing really in there around trading with the idea of generating profit on a down move, right? So in this scenario, with the way this question is being asked, trading naked strategies like calendar, and if the market goes down. So we can do calendars. We have done calendars, and those sometimes could be more about volatility going up or volatility going down. I would tell you that directly, like if we were bearish on a ticker, we would get rid of it instead of putting on a position that would profit from a downward move. So if all of a sudden, a handful, and we do this fairly regularly, right? We rotate through the positions on ULTY regularly. If all of a sudden, it looks like, okay, this our puts are deep in the money because we had a hedge on. I think everything at this point is hedged. So we do manage some downside on all the positions in ULTY now. But to take advantage of the downward move, we would just sell it. Now, when SALTY comes out, hats off to Max Convexity for giving us that name. Hi, Max. I know you're here. SALTY for the short version of ULTY.
SLTY?
SLTY. In that scenario, we probably, if we saw a stock that we thought, hey, this really is bearish, as a bearish bias, we'd move it into SALTY and out of ULTY.
Okay.
So
You
we're
notice
doing
how
some
the
downside management,
we
and
can
then
hide under the text boxes now. You see how big it is?
it's great. Hi, everybody. It's good to
Yeah.
have all the comments.
No. Okay. So I don't know if you can answer this. What's the hiring process? Maybe he wants a job.
Sure. Yeah, we do actually post jobs from time to time. I think we're up to including myself 9 full-timers over on the fund side of the business. Probably have some more. So I don't know. I don't know where we post them. We have an HR group that does that for us.
LinkedIn. I saw one on LinkedIn.
Yeah.
A while back. But do you interview everyone?
I'm usually like the third interview. Yes.
Oh, okay.
Yeah. I'm not the initial interview.
Yeah. You're not the last?
No, I'm the last. I'm the third. Yeah.
Oh, third and last. Okay.
Yeah.
All right. This is a question that keeps coming up, and I'm curious if you know anything about it. So Misty, right? They're on option. People sell options on Misty, including me. They offer monthly expiration dates. They don't do weekly, right? Obviously, a lot of stocks start off that way, and then they go to weekly. But this is a little different. Covered call ETF. I'm not sure. Do you think Misty would ever go weekly, and how does that even work? Demand?
Yeah, so we don't really control much about the options on our ETFs. We can go to market makers and request that they list them. We can go to the exchanges and request that they list them. But you need to have someone willing to make a market in those, right? They just don't come out. Like there is a little bit of a burden for a market maker to provide options on any ticker. And then obviously there's more of a burden when you have to provide weeklies, right? So you just took your strikes and you multiplied it by 4 when you went from monthlies to weeklies. So it's really not in our control. We can request. There's a chance when you take a look at some of the volume in like the Misty and Coney's of the world and Tesla, maybe we could go and ask if we could do weeklies on that. And that's all it would take. And then someone's just got to say, sure, we'll do it. But usually you go to the exchanges and they try to source market makers who are willing to provide a market every day, all the time. So that's the challenge.
If you don't ask, will it happen on its own?
Yeah, they will, right? They'll see, like they're going to naturally do it, right? The market makers want to be in that business of putting out options. And I think for a lot of ours, because they're options based, they go a little quicker in getting them out there, right? I think there's even options on YMAX, right? Like I think almost there's a pretty regular cadence now with our volumes that options show up. But to ask for weeklies, I don't know if any of them have, can consider that, but we can ask.
I think the interest is there. So if you can, please ask about Misty.
Yeah, sure.
All right. Thank you. All right. They need your funds to last 10 years. So can you do that?
Sure. That's the intention. There's no intention to shut these down, right? I mean, they're all doing. Yeah. I don't know if you saw a post from Eric Balchunas from Bloomberg recently where he kind of called us out a little bit. He was talking about another, larger company, doing some single stock names. I think you got an interview with them coming up in February. But his comment was, you look at YieldMax and kind of an independent company has put out whatever we put out, 30 plus funds. All of them have gathered assets. That just doesn't happen. And he's right. Yeah. That just doesn't happen. So, we are definitely happy with the adoption from the community and excited to continue to, put out more. I'd love for them to last 10 years. I don't see why they wouldn't, as long as the options market continues to trade the way it trades in relationship to the single stocks.
Yeah.
There's nothing unique happening right now in the options market. So I can't see like we're in a single situation. But, look, you got regulatory risk. Regulators may decide that they don't like this kind of stuff and put their foot down like they did on the doubles and the triples. Like you can't put out now, another triple ETF anymore, right? They have these things, these VAR rules and stuff like that.
Grandfathered in. Hopefully they don't take them away, though, the index ones.
I don't think they will, because once they're out there, they're out there. But they're grandfathered. Those guys, Direction and ProShares kind of have a monopoly.
Point, for sure.
Right?
Yeah.
But you start to see some single stock ones, like our partners at Defiance have, a double MSTR, right? And
that's like their biggest fund now.
It quickly became their biggest fund. So you could see some changes there, but no triples, right? There was no triples out there.
Oh, so, triple MSTR. Ooh.
How about quadruple? Anyway, The brokers wouldn't love that, the people that assess risk, but I think investors
Oh yeah,
will love it.
100% margin maintenance on those.
So I guess like that's I think there's things like that out there that are out of our control. Our intention is keep growing YieldMax, of course.
And I thought about this the other day. Who is the face of YieldMax, right?
I think you're looking at him.
No, who is YieldMax? Like if you go to About Us, there's really like you're Zega.
It's not my face. Aren't you seeing my face?
Zega Financial.
All right, so a little bit of detail on the corporate structures of YieldMax. Actually, YieldMax is not its own company; it's a brand. It has multiple parties that are investors in it. Zega's one of them. Title's one of them. There's two other what I'll call ETF incubator partners that we have on those funds. And really, think about it, right? It's the fund. The family of funds are on the Title Trust. Okay, so this is a little legal nonsense. Sorry, not nonsense. It's important. Anybody from compliance that's listening. But the idea here is, there's a sponsor that owns the economics, but then there's all the legal things that go from registration and company formation and those kinds of things. Like each individual ETF is its own investment company. You could read the Act of 40, sorry. And one of those things is each one of those is its own little company and has an advisor and has administrators and all of those kinds of things. So really, technically, these are all, on one of Title's trusts, which allows you to form these. But the economic interest and ownership of YieldMax is really spread out across multiple companies. It's really a joint venture and a partnership. I don't know if it'll always be that way. Maybe eventually, YieldMax could stand on its own as its own independent company.
I want them to go public,
You want YieldMax to go public?
Yeah.
Yeah, me too. That'd be great.
And I'll do options on YieldMax.
You'd be right alongside us, right?
So the answer to this is yes. You filed for Adobe and Berkshire. Berkshire, I'm telling you, man, people want that one. You just got to launch it. I know you don't think it's going to be popular, but
yeah. Well, it's there might be something else out there that was recently filed without me giving too much away. That kind of touches on
Costco. Everyone's Costco too.
Costco's interesting. Yeah.
Okay. How much room do you have to manage the downside tanking of companies like Supermicro and Moderna in YMAX?
So good question. So SMCI made us think about wait a minute, do we have to include it in YMAX, right? Even if we think there's a risk of it getting delisted. And so the answer was we did, but now we don't. So we put we stickered the prospectus. Basically, that means we did a small update that for certain reasons, and I don't remember the wording of it, we have the flexibility to not include it in not include it in YMAX or YMAG if we don't want to. So we're not forced to do it. And so far, we've been fortunate enough that, SMCI still seems to be trading on the NASDAQ, but now we have that flexibility to not include something that, arguably still has a chance of getting delisted.
So you're not forced to add all the cover call ETFs in YMAX?
We're not forced to. That's correct.
So why are we not kicking out Murni?
There's no reason not to. I mean, besides the performance,
it's horrible, right? Oh. It's just, Moderna.
Listen, I think because it's I don't know if performance reasons were a reason. I'd have to take a look at all the flexibility there. I think it was more of regulatory reasons, right? Listing reasons, availability, right? So if it was to get halted for an indefinite period of time, you can't trade it. We can't invest it. Whereas Murni, it trades just fine. The performance is less than fine. Yeah.
It's just.
By the way, I don't know if you've watched lots of inflows into Murni last month. I don't know why. That's not a recommendation for me at all, but just making an observation.
Yes. So for those of you watching that keep buying Murni, you're the problem. See, no.
Has nothing to do with Moderna itself, I'm sure. Yeah.
Well, yeah, unless another COVID happens, then Moderna will do good, I guess.
Yeah.
So how do these YieldMax ETFs pay such a high dividend? How can they sustain that for a long period?
Yeah, it's a good question. It's a fundamental question. We've probably hit on this one in the past, but we'll answer it.
You have to keep in mind there's always new investors,
it's great. And your community's been growing. So congratulations to you on that, Rod. So that's good stuff. I would say it has to do with the option volatility, right? What we distribute is the time premium we sell each week, whether it's a call or a call spread. If we say we're trading a stock that's at $100 and we sell options for $1 4 weeks in a row, we're going to distribute those $4, right? Now that's if the stock did change, but just for argument's sake, it all has to do with the volatility in the options market. And so as long as options continue to price the way they have for the last 50 years, then it's going to be fine. I've asked, hey, have all of these premium selling funds caused a decline in overall premium, right? Like if there's so many sellers, and Jay, you're selling, against $1.4 billion of NVIDIA every week, are you really lowering the volatility of the market? There is something to be said for that as a potential risk. But as soon as, you start to see cheaper call options, guess what? On a stock like NVIDIA, the market comes in and buys it. So there is, bulls love it. And by the way, we're also bullish because guess what we're doing? We're buying a call, strikes below, right? So we're not causing a complete one-sided trade. We're ultimately bullish as a covered call strategy, right, on any of these single positions. But as long as the options continue to have time value and the Black-Scholes model applies and there's juice in calls and puts, then it's going to be fine. Where you have the risk, and we saw a little bit of this, was when the VIX drops or volatility drops to like 10, 11, 12. Like I think we hit, we were pretty low before, at least twice in our history that the volatility was pretty low. And you saw distributions drop. Actually, last month, you saw the distribution rate drop a little on ULTY. I'm just using that because that's a higher one. Vol was low. And when vol's low, then we generated less premium selling the options. But like ULTY went from, I think 100% annualized rate to 90%, right? It wasn't a tremendous drop. But you'll definitely see that in some of the tickers from time to time.
But for YMAX, I mean, you're always going to pay what you got paid that prior week.
Oh, for ticker YMAX and YMAG, and now the two Dorsey Wright funds. Yeah, in those scenarios, they are just going to pass through what we earned, what they got paid from the underlying holdings. Yes.
So, and I know someone's going to ask a question about the Dorsey Wright ones, but real quick on the payment. So those are monthly, but you're getting paid on different times based on the funds you own. So that money just sits there, I guess, or does it get reinvested? Or
no, the timing on YMAX, the YMAX payments are based off of
YMAX, the Dorsey Wright ones.
They
own funds. They own like 5 funds that could be different payment dates.
Yes.
So when you get paid and you're waiting until the next, because it's once a month, what does that cash?
Yeah, I mean, something gets paid, right? It obviously has to be held there. The asset doesn't get lost, right?
Yeah, it has to be all the cash, right?
Yeah, and the question is then how often do you put that cash to work? Are you rebalancing it? So it's a watch and see how that all kind of goes. I don't think we disclose that, so I think you'll see it once it starts happening. But yeah, I mean, the distribution is going to be what it's going to be, and it's going to be defined by what the underlying holdings paid in, and we don't know when those. We don't know what that configuration is going to look like month to month. So you can't claim, when you don't know when you're going to get the dividends in those.
Yeah.
It's true. It will have a volatile dividend chart, right? With only 5, it's going to be fairly, volatile. The point on that one is more of, you think about it when you take like take a partner like Dorsey Wright. It's more about momentum and growth using technicals. Like that's their claim to fame. Yeah. And so, when their momentum signals tell you to get long one, you're more about the growth than it is the dividends, right? So, and look, you always got YMAX there for you. You always got YMAG for you.
I feel like the hybrid, my thought was maybe you should have, like on the individual, maybe use the S&P 500 for those top 5, right? And then obviously use YieldMax for that top 5, right? Because you're limiting yourself to what YieldMax offers. Unless this is, I guess, a reason for you to create more funds that are.
Why not create a bigger universe, right? I think, and that's why we continue to file, and we do continue to launch. Like what?
We'll have 500 funds soon enough. You'll have the S&P 500.
That would be fun. That'd be a lot of ones that were not interesting in that list.
Yeah. Oh, for sure. Credit call spread question. So Better off to sell. So yeah, so this is something I always talk about because sometimes, obviously, if you do a credit call spread, right, you have to sell the calls a little tighter, right? They have to be a little
A
closer
little closer.
the money in order for you to pay for that, the buy call because you're still yielding the same, right? So is it because you're always doing credit call spreads now? Do you feel like it's always a better strategy to do that? Or, although sometimes like on Misty, I saw a few times they just sold the call and I was happy. I was like, good job, and it worked, right? So what are your thoughts on that? Like,
All right, so first I want to say, Bob, I love your evil Spock little picture there. And I love the name Bartolomeo. It's actually, I had an uncle named that. So great things going on there, Bob. However, I would tell you the call spreads saved us big time on Tesla, right? So Tesla was on, not that I don't know if you want to touch on this, but like Tesla was on kind of a depreciating price path because it was so hard to actually pick those call spreads. So if you watch the IV on Tesla itself, it rarely pays you for the actual volatility the stock goes through, right? And this huge run that it's had recently, Tesla would have lagged even more if we only saw the call spreads, right? So I don't have a chart. I'm going to look real quick. So sorry as I look away.
Yeah, it's unappreciated IV for sure.
Yeah, so I'm just trying to take a look at the chart of the IV on Tesla, right? So when it had that big move right around the election, right, its implied volatility was basically at the low of the year, and then it shot up. So we would have been selling calls 2% out of the money, right? And we would have got been through our strikes multiple times. And so I would say the call spreads were extremely helpful on Tesla. Now, look, I'm always willing to say, yeah, great, we could Monday morning quarterback this, but I know that it is definitely on that particular ticker has been really helpful. I mean, Tesla, sitting at $16 on the NAV, right? It was on a path to go back down to 10, right? Where we did the reverse split, which is extremely unpopular. We heard everybody on that. So we were like, well, what are we going to do when Tesla starts pushing us back down there? But the spreads were really a lifeline for us.
Yeah. So the spreads, though, some of these like Misty, there's $100 gap, right? Between they're selling calls at this strike and they're buying calls. I know it's expensive to buy the calls, right? So you're trying to do it within reason. So is there you ever look at that gap? I call it the dead zone, right? Because it's essentially a loss, right? If it goes, above that. But do you consider that like the gap? Do they have rules? Don't go too far, right? Don't go too. What if they did 200, right? Like it gets a little crazy there.
Yeah, I mean, there's times where you go, okay, like that. Even though that's the volatility of MicroStrategy, which is extremely high, where are we at today on
101? I'm showing.
Yeah, so vol is down, right? It was 180, right? Easily 180, 190%.
Oh, yeah. It was over 200, I think, at one time.
Right? I mean, the fact we're down to 100 is like, woo, it's coming down. Yes. So there are times where we go, it's just not worth selling too close and buying that longer spread. Now, I will make a point here, and you've probably seen this happen. In what you call the dead zone, I agree. There is a point where those spreads, and this is going to be a little nerdy, so I apologize. There is a point in those spreads where we go from earning time value to paying time value, right? So as you get closer through that, so let's say this is the width of your spread. I'm going to go here. It's 100 wide. As you're getting to like the $50 into it, the long leg is growing faster in extrinsic than you're earning in extrinsic on the short leg. And so, you'll see unless the market gaps on us, we almost never take those spreads all the way through the long leg. There are times where it doesn't make sense to be in the position anymore because at this point, if the stock is sideways, I lose money from decay. So yes, there's a little bit of a give up. There's definitely a lag there. But because of that long leg making money as the market is going up, we will roll those early, right? So we watch that pretty carefully. And that's a little bit of a trick, right? Not everybody understands that because we could put it on and let it go and be like, oh, I hope it goes through. But look, the odds of that happening are fairly low. I'd rather harvest all the time decay I'm going to get. Because remember, once I've earned my time decay, there's no reason to be in that covered, that short call position or a short call spread, right? You saw us do it in the past when we only had the one leg on. We would roll out when there was a nickel or a dime left. Well, now I don't have to wait till there's a nickel or a dime of time value because I'm making time value on that long leg, which is why they work for us. So yes, on the Misty ones, there were some that were really wide. The momentum was incredible. We didn't want to be caught completely flat foot. It's why we went half and half a few times on that, right? But we also didn't want to find ourselves, MicroStrategy $600 and we sold the 350s, right? We didn't want to be in that position either because of how fast it was just moving. There was, I think the MicroStrategy options market was fortunate to not really get squeezed. It was close. We actually did not see a short squeeze on that. It was just, enthusiastic buying. But if you all of a sudden got what we call a gamma squeeze where, option market makers have to buy stock regardless of the price to get neutral, like what, you could use GameStop as an example in 2021, right? That's the classic example.
Yeah,
now it's
MOAS, by the way, all right?
Yeah.
You know MOAS, right?
I've heard.
Other short squeezes, right?
Yeah.
You got to get the terms right here.
Yeah. So when that happens, you don't, in that scenario, you don't know how far one of those things could go, right? It could do a 2x on you in a few weeks.
Yeah. Okay.
So a little bit of preventive medicine, right? Sometimes we do a half and half.
So when they do that $100 gap, are they really just expecting to probably close it out early, right? If the momentum is shifting up versus like, all right, it's probably not going to reach this far, so we're not going to let it go to the end of the week. I know you don't let it go to the end of the week anyway, because you don't want to blow up the options chains with the amount of trades you do, but is that kind of the expectation? Yeah, because obviously if it jumps up, say 10% in a day on Monday, you could close that out, roll it, the same day.
Yeah, that's exactly right. And once again, it's all about how much time value you've got left in the spread, and it comes out of the spread quicker. So if you're waiting for it to come out of the call, it'll almost never come out of the call. But if you're entirely until Friday, but if you're waiting for it to come out on the two positions together, the long side is making is appreciating in time value. That makes it much faster to get out. And now you've had a greater percent of participation on the way up. And then I could sell a new spread farther out of the money. And then you've got that period where there's no dead zone, where it's 100% from stock to short strike. We get to continue to unlock more of those. So there's the active management on the short spreads is certainly interesting. And again, like you noted, a lot more volume due to them. But I think, if somebody was to do a little research, not something I can produce, but somebody's do a little research on the performance with them, pre-September and after September when we adopted the spreads, similar markets, I think you'd see it's a higher participation rate.
Okay. All right. I just saw someone paid $2, so we'll ask their question. Will ULTY's new strategies keep the NAV stable, right?
Again, yeah, that's the hope, right? So I would tell you last week, the protective puts and the protective positions and the risk managed positions paid off nicely. Now, it's not great when you need your protection. It's like insurance. You never want to cash in on your insurance. I mean, something went wrong against your underlying thesis, but limiting your downside has been key. So we definitely had a few volatile stocks that had bad movements against the fund last week. So I would tell you that ULTY's NAV has already started to stabilize, right? The last few months. I would say, that's the objective here, is to get the income. And now we have definitely a focus on losing the risk, but I want upside growth first, right? Second. So first is income, second is growth, third is protection. That's the order of things when it comes to ULTY.
Okay. Why are we both so damn handsome?
Who is that?
I don't know, actually, but he might be drinking.
Yeah. Early on the eggnog.
I'm gonna go to the latest comments. I'm gonna screw everyone up and do that. All right. Didn't even read this one. What do you consider to be the best metric for determining how resilient a fund would be during a bear market or unexpected drop? When would the fund cut bait, and what would that look like?
I don't know what cutting bait means. Like, we obviously wouldn't exit. We have to be long our positions, right?
Yeah.
We have some flexibility as to the percentage that we have, but like the target of the fund is to be, exposure to the stock, right? So but to the best metric question, volatility and downside participation, right? So volatility is not the easiest thing for people to do the math on. It's just, a little bit of square root stuff here. Maybe you could look up an equation and post it later, Rod, and show people the volatility equation. But but I would say watch for the participation on the downside, right? On the down days, did the fund participate 99% of the way down, or did it only participate 70% on the way down, right? So that to me is probably, watch for that. Look at the down days, just compare those two and watch for the participation rate. That to me is probably the easiest one to do, right? So get, daily rates of change of the underlying, daily rates of change of the YieldMax fund, and then just compare on the down days, what was the percentage that it participated in. And look, that's not perfect, but it's a real quick way to take a look at, what the downside, beta is, the rate of change along with the underlying stock. The other thing I would tell you is, volatility is important, right? So, I would say, it depends on the market, right? MicroStrategy is going to be less resilient than Apple, right? We know this, right? Just because the nature of those funds. So no surprise, the higher the distribution rate and the higher the volatility of the underlying probably means that you're going to have more risk associated with those. If you're ever on one of my advisor calls with me where I have an advisor asking about using these in their practice, I always make sure they start with YMAX, because of the diversified nature of the fund. It's got the volatility of the NASDAQ. So look, you're still taking NASDAQ risk, which if you remember, generally is more than the S&P, right? So still more than stocks and certainly more than bonds. But what I would tell you is we tell folks, start with that and then add around the periphery. Now that's a little less interesting if you're searching for, doubling your money in dividends and distributions in the first year. But the distribution rate on YMAX is still pretty healthy. And I would tell you that the diversification there is worth it if you're looking for stability, right? A rotation of YMAX. And that way you don't have to pick and choose. Like, I don't know, like what kind of sell-off is it going to be? Is it going to be a crypto sell-off? Is it going to be a discretionary spending sell-off? Is it going to be an interest rate sell-off? Like, there's a lot of reasons we can have a sell-off in the market. Is it going to be a tariff international thing? I don't know what's going to happen there, right? So, YMAX to me is like the good. Everybody, understand you still have stock risk, but it's a place for a little safer harbor than an individual ticker.
Yeah. And you just had R.o.D. I know they kind of didn't launch at the best time, but, they're in the end, it's going to raise the overall yield, I would think.
It should. Yeah. And look, and maybe we need to put some more, I'm going to say, stable, less crypto focused underlying stocks, right? Stocks with lower volatility in there. That's a reason to launch Burke, because that's pretty stable.
Yeah.
I just think that yield isn't very interesting to most folks.
Raining distros, which is Matt. Thank you, Matt. So he said you need to get drunk too. So whenever I'm invited to the Bell, I'll use some of this to buy you, Jay, a drink.
Nice.
All right.
Awesome.
Don't hold me.
Thank you. Yeah. Thank you, Raining Distros. I'll have a drink on you for sure.
Okay. Let's see what else. Someone asked about swag, and I know the answer. You don't give out free swag, so we'll just skip. We'll skip that one. I got in
trouble for that last time, I guess.
Did you? I'm sure you always get in trouble for something. All right. So YBIT. Are you still trading BITO? And if so, why can't you add IBIT yet?
We are 100% IBIT right now, so no longer BITO.
Okay.
Yep. So we can do it. Look, it's a real good question around why YBIT seems to be lagging behind Bitcoin and Coney and Misty. It's a little bit of, here's the thing about options on IBIT and options on BITO. There's a little bit of laziness associated with those. Like Bitcoin options price more like a commodity with concepts like contango and backwardation that go through it in there. And I'm not trying to, confuse the issue by throwing out big words, but the point of why I brought that up was there are some additional challenges to the pricing on the options because Bitcoin trades in some ways more like a commodity than it does like a stock. stock trading is a little different. Assignments are a little different, right? So when you look at Coney and MicroStrategy, while they are, virtually Bitcoin, especially MicroStrategy, is virtually, tied to Bitcoin's price. Although, I don't know, not always, right? The market might have got ahead of itself on that one. The options are equity options. And when you look at options, and part of the reason why it took so long to get options on YBIT was that, they were deliberating whether is this a commodity product or is it an equity product, even though an ETF is generally considered a security. So look, there's some complication when it comes around to that. I would tell you, it is not unnoticed on our end about the lagging in price on YBIT. I would tell you it has my direct attention, has my head of trading's direct attention, and the portfolio manager's attention on a daily basis. So we are paying attention to it, and always looking for ways to improve that.
Because that should really be a popular fund. Like that should be not quite misty, but I would think that would be up there, right? So maybe if it to start.
And look, there's growth. There was money that flowed into it today, right? There's growth in that fund, but you're right. You'd think a covered call strategy on Bitcoin should be, and it is popular, right? I think there's well over 100. There's 100 million plus in that fund, so there's definitely some growth in that. It's been around since April, but to me, I'm with you. I'm always fine at facing the truth on these things. I think we could do a little better on that one, and there haven't been any trades that were like, well, screwed that one up. That hasn't been the case. It has been like, okay, what's the right construction here for us to use to capture more upside of Bitcoin? And I would agree. We should try it. We should do better.
Feet and what do we call this? Fivy? What are we calling it?
Feet and Fivy?
Feet and Fivy. Why wasn't Plady included in it? If it's based on momentum, do you have any say? How does this thing even work? How does this Dorsey Wright
I know that's like their secret sauce. So we, believe it or not, I'm not actually, Zega Financial is not the portfolio manager for Feet and Fivy. We may be listed there. I don't think we are, but this is managed by really Dorsey Wright is the one giving us the picks. They are, like I said before, they use technicals and other factors to generate momentum indicators. And then, they take a look at the top 5 of, they look at all of our individual stocks that we have YieldMaxes on, and then they give us the ones, and that's what builds the first build. So, I can't tell you much more than that, not because I can't, I just don't know, right? But I would tell you that Dorsey Wright's a strong partner. They've got, quite a bit of history. They're strongly affiliated with the NASDAQ, if not owned by the NASDAQ. So, they're a legit outfit. And I would tell you that, we've seen some adoption out of the gate on those funds. That's been pretty strong because just the concept and the value that their name carries. So, look, we'll see how they do. I keep calling it Palo Alto, but sorry, Palantir.
I don't think is that how you say it? I always get yelled at for saying that.
Palantir?
No, Palo Alto.
Oh, that's a different company.
I know.
Palo Alto is.
That's not how you say it, though. Yeah.
I don't know. Like, your jersey stopped you from saying Palo Alto?
I can't say it. I don't know.
Okay. Don't phonics. All right.
No, it's like Palo Alto. Or I don't know.
Palo Alto.
That's not it. I don't know.
I think that's it. Well, if it's not, that's why I'm saying
you in the comments, maybe. But
okay.
All right, I'll cut you off. Where were you?
No. I was just saying, it's the Dorsey Wright stuff is interesting. Look, I think let's give it a little time and see how things go, and see what the positions are.
Are you allowed to answer this?
It's like asking what your favorite child is, right?
Yeah, exactly.
Look, I think it depends
on the highest assets under management, right?
No, it's actually not. Like, when I think about it, it's got to be what's most appropriate for you as an individual investor. I just told you YMAX is what I start with for a lot of our advisors, because for them it's most appropriate. When I got a buddy of mine who loves crypto, and he's like, all right, what do you got here for me? Then it's the Coney Misty conversation. If you're looking at someone who is looking for just kind of I'll go back to the stable question. It's the Apple's, Metas, and the Googles of the world, right? So again, it's all there. For me, Jay personally, right? If like for my risk tolerance and my everything that I have, I really, I lean towards the YMAX as the solution, because it's just, the distribution rate, the popularity of it. A lot of folks love the weekly dividend. I was surprised how important that was to everybody. I'm glad we did it. And the diversification of it, it's not our biggest fund. It's probably our fifth largest fund, but there's a lot of good ones on there. But again, it all depends on your risk and your goals. Like, that's a hard question to answer.
Yeah. It's before I ask that, if Misty offers weekly options, are you allowed to create a covered call ETF on Misty?
It's a really good question, because when options started coming out on our own ETFs, we looked into it. Like, why not do a covered call on NVIDIA, right? NVIDIA, right? Yeah. We definitely looked at it. So the answer is we have too much influence as to the outcome price. So, like, imagine this, right? We're defining the upside limit on NVIDIA. So then to have options on that, you would see what they were. So, it's almost like, you would already know the maximum that stock could go up, right? And so it wouldn't make any sense to sell a call or buy, be bullish on it. You should be bearish on it at that point. So it's because you can impact the outcome of the fund by the decisions you make. And you can always do that, but like, it's actually, you can be really deliberate in defining, where you are. In our individual accounts that we manage, we can't even sell options. So let's say you had an account with our wealth management business, which is Zega Investments. If you had an account with us there and we owned Misty and you said, hey, can you sell some calls on Misty? We would say, actually, we can't. So we can't even do options in a separately managed account on our own funds, because we control the outcome of the fund in a way.
Anyone who works for Zega cannot sell options on Misty.
That's correct.
Okay.
Yep, they're restricted.
Okay, because I was just going to bring up that point when you said, we have too much control.
Yeah, definitely can't trade. And if you want to trade just the underlying stock, like the underlying ETF, you want to trade Misty, there's a whole compliance approval process. So you can, but you have to make sure you don't have inside information, right? You don't know something that's not public, and you're not involved in the day-to-day trading. And if you are involved in the day-to-day trading of Misty, then you should know how to go create it on your own with the options in your account by yourself.
Yeah. No, I think I always said that it wasn't worth it to do options on your funds, but Misty, they're changing that game too, but shouldn't be surprised. Juan wants to know if you're going to offer more funds on a weekly basis. I don't know if he's mentioning this, like the sector, like Soxy or these other ones. Everything else outside of the covered call ETFs, well, that they line up weekly, but I guess it's just YMAX and YMAG, right? Nothing planned.
Yeah, so it's definitely, the single stocks are hard to do weekly distributions for, just because we don't always have a weekly position on, right? Sometimes it's 2 weeks. Like, I think we're already rolling out to next week for stuff now, because you got a short week, right? You got 3.5 trading days. Let's just call it really 3 trading days this week. And, stuff like that makes it a little more difficult. There's also quite a bit of work involved. Now, look, we're already doing dividend work every week because of the staggered, groups. But there's, I would say, currently not a lot of plans for that to be more often. However, never say never there. So there's plenty of discussion about it. There might be others that pay weekly down the road, but I would not expect them on the single stock tickers.
Yeah. I assume the answer to this is no, because
it has to be like, when a call spread style, right? Individual ticker style, right? Like, we don't have any inverses in there, but there's no limit.
No plan to add anything. It's always going to be the covered call ETFs, though. It's never going to be like a sector one in there. Or
Correct. Yeah. It's why ULTY is not in. It's why MAG is not in.
Yeah.
YMAX, that'd be weird.
Yeah. All right. Well, I guess this one's hard to answer. I guess with all the funds being added, it's been around 40%, honestly, lately, pretty consistently, but no reason that it won't be, right? I mean, obviously, if you add Berkshire Hathaway, if you add Costco, that'll bring it down. But for now, I think the answer is probably possibly if IV stays up, right?
Yeah. I mean, so it's a good point. It all depends on what's going on in the market as well.
Yeah.
Right.
Except when MSFO week,
Well, that is a bummer for for YMAG, right? Yeah.
Yeah, for YMAG. Yeah.
It was interesting how few people figured that one out at first.
Oh yeah, that
I think you got it right away.
Yeah, and I'm just still in shock that you put MSFO on their own. Like,
it's just the way I think the timing worked out because of the way it was already. We knew we wanted to. It was 7, and we were 1 week was going to be short. Like it would have been fun to put like a bigger one in there, right, to kind of offset. Like if you put like Tesla in that one, but it didn't line up with the way the other funds in each one of those weeks were. So YMAG probably got the least amount of consideration. What was most important is we were trying to create some level of regularity week to week by the the way that the original the groups are organized. And actually you could see with Marrow, for example, the group that went into just went into the group that had no real crypto exposure, even though, so I think the first one will be 5 weeks before its first distribution.
oh, that was your thinking on it. Okay.
Yeah, so it's like, look, we got you
had nothing to do with timing of payment.
We could have done it with payment, but once that's over, it's just the initial. It actually turned out to be more of a to give kind of a kind of a constitution so that there's some crypto or Bitcoin focused fund in each one of the weeks, because that particular week was lacking having there was no crypto exposure in that one. So there's a little bit of deliberateness about where they land, in which group. But unfortunately, YMAG, there's not a lot we could do, and it didn't get priority in the consideration. So you got a MSFO week.
Unless you make it a Mag 8 yourself.
Yeah, come up with their own thing. Who knows even if there'll be a Mag 7 in next year.
Yeah.
Not our fun, but I just mean that as a real term. People don't love it. I mean, you remember there was a lot of discounting of Tesla to be taken out of the Magnificent Seven at one point. Now it's it. Everyone loves it now.
Yeah, everyone's threatening it's coming out. I'm like, who says this? Like, where does this information come from? So here's about the payout. Good question here. Because obviously, I track your funds, right? So let's say a 4-week cycle, right? You make no money, right? It's mostly losses. I always assume you pay out based on the IV. I don't know if that's true or not. And then when you are making money, if you make too much money, like Tesla did, it made like $5. Obviously you're not going to tell me what they're going to pay, but they're not going to pay $5, right? So you're holding some back for a rainy day, right? For another day, because there's going to be a bad cycle. So what's the thinking behind either when you make no money or too much money?
Yeah, so a little bit of secret sauce here that I'm going to hold back. But you're right. We will distribute what we sold based on implied volatility, right? So the option premium, the call premium we earned, that's always our base case. I think you see that when an underlying loses money, or let's say it's only up 1 or 2%, but we sold for 4, you're going to get all 4, right? So that's pretty consistent. When it comes to the upside, you're right. Like, look, there's this interesting balance. We don't want to find ourselves at the end of the year and have this tax problem where we have to do a massive distribution, right? It's just not great for planning, and we held back distributions early. So we will distribute some of the upside gains of the underlying ticker each 4-week period. The formula on that is, I'm not going to tell you that, but because I know you'd love to know that. But you like guessing too. You're always trying to guess.
Figure it out. I'll figure it out.
But there is always going to be a portion of that, past the target yield that we plan to distribute. And again, it's because we want to, have some NAV stability, right? Of course, but we want to pay back. We have to pay some of the extra that we make, right? So, and eventually we got to pay it out. And so, we don't want an excise tax problem at the end of the year. And that's what they call it. And so we just, we're going to pay out some of it. And I think you've probably seen, we will hold back a lot when it's a big move. Like the MicroStrategy move, that we could have paid out on was huge. But, we thought better to, still hit a super high rate, but it's not a holdback for rainy day, but it's also, let's keep the NAV stable for folks, because that is one of the biggest digs on YieldMax is, oh, but my NAV keeps dropping and I don't want to reinvest the dividends. So why is the NAV going down? We recognize that, even though, that's a choice, it also matters to us, where we're, where we're priced, and we want folks to feel like there's still value there, and these things aren't going to diminish to zero, because they really won't. But
so if you hold back, and you probably won't answer me, but if you hold back money from a previous 4-week cycle, should that be considered on future payments, or is it completely just that's saved?
Well, it could offset future losses, right?
Yeah.
And so there's that too,
Yeah.
right? So, but let's say you have a stock that's only up all year, which I don't know which one that would be, but if that happens, then you're right. Then we're going to have to increase and increase and increase
at the end of the year, right? You want it balanced out, right?
Yeah, I'd rather make that a little more stable. So you'll see us kind of increasing it. Though, look, we've only had 2 periods of time where we've come to an end of a year. First one, let's ignore that. So last year and this year, and we've done that. We were pretty good throughout the year of distributing gains, so that we didn't fall into a spot of having an excise tax. Now, that's not all the funds we manage. We have had some other non-YieldMax funds where it's like, nope, you got to pay extra. It's just is what it is. And Merry Christmas.
The last question, and then I'll let you ask a question to myself or the community, because I have to be mindful of time. But your fiscal year ends 10/31, and I know this is tax stuff, boring, but do you have to? When can you pay out that 90%? Right? Can it be later? Can it be till like a 60 days from that 10/31 date, or does it have to be like shortly after? How does that work?
Sounds like an accounting question, and I was assured there would be no math on this interview. I'm kidding. That's a little Chevy Chase for you, old Sunday. So no, that I don't know the answer to that, quite frankly. Right. So there are times where our accounting folks say, "Okay, Jay, you've got this much accrual there. You want to let it run? How much you want to pay out?" Right. So they'll let us know when we're above and beyond what a standard number would be. But I don't know the exact rules when it comes to calculating and the timing of the excise tax associated with fiscal year.
Well, was there any this year that after 10/31 they said to you, like, we got to pay this, we have no choice, right?
Maybe.
It's going to be in the annual statement, right?
It's going to be in those 19A filings. I don't actually think there was. Not for YieldMax, there was not.
Okay, because I try to figure that out, but again, the timing, it's nearly impossible. But
I think if you really want to track it, you got to grab those like 19As on a monthly basis and kind of build your own.
They're estimates.
Yeah, I mean, look, it's weird because we're at a October fiscal year, and the calendar year is different, and you pay taxes on the calendar year, but we're paying on the fiscal year. It's a little
just go to 1-1. Look at a 1-1.
Yeah, I know. Yeah.
All right. We're an hour in, so it's now time for you, if you have any time, to ask the community questions, if you have any questions, or for me in general. I know you probably
I would say my only hold on, wait, I got a different hat for you for this question. I got an angry hat for you.
Should I put my beard on for this?
There you go. I got a Grinch hat for you.
Put my beard on.
All right. Wow, this is way too tight. I think this was like my son's hat.
You got a big head like me. See?
There you go. I would say stop focusing on the recovery rate, will you? Like it's kind of, I would say, use the recovery rate. I get it why you want to talk about that a little bit, and just be like, look, how much does it bounce back from distributing the dividend?
People love the recovery rate.
But it's so it's almost irrelevant. There's nothing we could do about it. I shouldn't say it's irrelevant. There's nothing we could do about it because we need the underlying stock to go up to get the recovery rate. So I'm aware of it, and I know you like to talk about it. But really, to me, it's look at the dip before. Let's take it and associate with how much did it go down compared to the underlying stock. To me, that ends up being a better barometer of how well the fund is being managed versus the upside capture. But hopefully, the point of the spreads is that we do a little better job on the recovery rate and not get whipsawed and stuck at a much, much lower strike. That's my only comment for you. That's for you, Santa.
That was more of a complaint.
Santa, retire on Santa. No, what?
Santa Rod.
Santa Rod. Thank you, Santa Rod. But I don't want to go out in the negative, so I'm putting the happy Mickey Mouse hat on.
There you go.
That's my Florida hat.
Any questions for the community? If you want to check back later on anything, or
I just thankful again for everybody and their engagement and their questions and comments. And Again, I really always appreciate the support of the community. So thank you guys. We're very, very thankful and appreciative of it. And we'll keep, trying to be innovative and putting more funds out there and, doing doing more misties, right? That's all great stuff. So really, I don't have a direct question for the community. I think everybody was really helpful when we made the decision to go to, breaking up the different distribution dates and what's weekly and what's every 4 weeks. I think all that was really helpful. And so we always appreciate that input. So, comments, I read your comments after we do these interviews. So happy to take a look at what else is in there. But have a happy holidays, everybody. Thank you.
All right, I'll let Santa Rod close it out. Ho, ho, ho. Thank you, Jay. Merry Christmas from Santa Rod and the community. Thank you for your time today, and we hope to have you back very soon. So have a very Merry Christmas.
Thanks, Santa. Thanks for having me. Thanks, everybody.
Thank you, everyone. I'm ending it here, and bye-bye.